What is going on YouTube? It's saying we're back with another one. Now in this drop, coming at you with 4 plays, but before I get the show on the road, make sure you guys are hitting that like button for me. Alright guys, so we're moments away from kicking off a brand new week in these markets. Now whenever Sunday lands, I'm always pumped for that restart. It's just another opportunity for us to whip out the playbook and establish some moves that's going to make us phenomenal returns over the next couple of weeks and quarters. Now, there's a lot of moving parts in the market right now, so I'm going to take this one as an opportunity to regroup with you guys, help you navigate these markets and put you in some winning lanes as we continue through the year. Now, before we get the show on the road, make sure you guys are letting me know down in the comment section if you're going to be joining us on any of these plays as you get prepared to kick off a brand new week in these markets. So let's run the first one. Now, before I go ahead and give you guys some coverage on some of our existing plays in the portfolio, I want to throw this one out to you. That's ticker symbol GPS, that's GAP. Now, this is an apparel retail play that should be familiar to most of you, if not all of you. Now, the reason why I'm bringing this one to attention now is because they've got their earnings coming up on Thursday. It's been a phenomenal earnings season for these apparel retail plays. We've benefited massively from them. Our plays like Nike moved up for us, Macy's as well, and our most recent success was Foot Locker that I got the Discord into before they announced blowout earnings, and we saw that stock price move up 10% on the day. Now it's time for GAP to step on center stage on Thursday, showcase what they're about. Now in their last earnings report a couple of months back, they posted up good numbers, great guidance moving forward, but the market overlooked the play. Check this. Stock prices moved down over the last 3 months about 15%. So in the run up to what will be another blowout earnings, this one's got the right ingredients to cause a street surprise, moving that stock price up. Now this play is benefiting from a major theme I've been getting you guys to move in, that is getting in on the action of some of these quality retail plays. Now in terms of how we move with this one's got some support around the $26 mark. So over the next couple of sessions, in advance of their earnings on Thursday, we're looking for entry at 27 or below. If we catch them 26, even better. The lower, the better in the run up to earnings on the play. Then, as I say, I'm expecting to move up after earnings. There's still longer term potential in this one, but if you want to cash out after earnings, that's fine. You can then rotate to another play, or you can hold this one through the next couple of quarters because, as I say, we're going into some key seasons, back to school, Christmas later in the year. All of these are going to play into phenomenal numbers for them as they continue to transform their business. We know they're aligning to big brands and certain celebrity endorsements and things, which should continuously help grow the business and get this one moving up into the 30s. The next one I've got for that ticker symbol DAC, we've got Detonate. Now ahead of a brand new week in these markets, you guys know I like to give you some coverage on one of our channel premium plays. Now the shipping industry still remains very much in their favor. As a matter of fact, the chatter is these large retailers from a Target to a Walmart to an Amazon, they're all scrambling to get their Christmas stock in right now. So you can imagine the scenes at the port. That being said, there's no shortage of business for the nails. Now if we look at the charts, guys, look at the 1 month. This one is moving like clockwork for us in that upwards channel. I want you to home in with me on the 1 week chart because we got some resistance forming at that $77 mark, the high 77s. We saw it touch it on the 18th of August and again on the 20th of August before closing out the week short at $76. So we all got our eyes on them breaking through that $77 barrier into the 78, and from there on they should be able to make some fresh ground. Let me remind you, the 52-week high on this play clocked in at just below $80. Now given the last earnings they post up, their guidance moving forward, the shipping industry, they've laid out that runway to $90 by year end. So it's good to see a lot of you guys already in this one hitting phenomenal returns. And now for those of you who are new to the play, or if you're looking to increase your existing position, you didn't get enough shares the first time round, what you want to do is catch them as close to support as possible, which comes in at $73. So over the next couple of sessions, if you're fortunate enough to catch them in those type of areas, 73, maybe even the high 72s, that's the point. You guys want to load up on your position. This is a play to be pounced on in any weakness because of the strong tailwinds taking them through to close of this year. The next one I've got for that ticker symbol CLF, that's Cleveland Cliffs. Now this play allows you guys to tap into a major theme in these markets, and that's the steel boom. You already know that my favorite play in the space is Nucor, but Cleveland Cliffs is a good option and they're more in the buy zone right now. Now check this. This play's come down 11% on the week, so we've seen a big shift down in the play. But if we zoom out, look at the bigger picture. They've just come down to their support. So it's these types of levels you want to ease into the play, but Over the next couple of weeks, you want to ease in lightly because we've seen a bit of a shake-up in the commodity space. They could trend down a little bit further from here, but we've seen them bounce up several times, make a recovery. That's great upside on your money. That being said, I'm still expecting this one to reclaim all-time high territory and get into the high 20s over the next couple of months, just riding the wave of the steel industry. So that's ticker symbol CLF, that's Cleveland Cliffs. This is one to keep on your radar as we get ready to kick off a brand new week in these markets. Gonna round things off with ticker symbol CZR, that's Caesars Entertainment. That's standing $85. This one is far too cheap given the last earnings they post up and the direction the business is moving. Now check this. This one is currently trending at pretty much a 3-month low at these types of levels. Now right now, the market is ignoring, overlooking these gaming gambling plays, even the best of best in class. Now they will start to take notice this year. I'm expecting their next earnings, the market will wake up to the play. So in anticipation of that, just make sure you guys have your positions, continue to build over the rest of the quarter at these types of levels in the run up. This is one that will reclaim that $100 plus territory. I'm just putting them back on your radar. So if you've been rocking with the channel, you know what time it is. I only started investing a few months ago, got too carried away too early on with investing too much of my available funds. Now I don't really have too much to invest. Just wondering what your advice would be with this, and also wanted to know if you have a certain percentage of your available funds that you keep as cash. So for example, if you had 10,000 total to invest, would you try and keep at least 10% or something like that, so you don't get into a similar situation where you don't have any dry powder to take advantage of certain plays. Now this will be one that most of you can relate to. You see a few plays that you like, you go in super heavy, only for a few months down the line, other buying opportunities come up, but you realize your pockets are empty and you can't take advantage. That's why I say make sure you guys have got dry powder on standby, ready to deploy into these markets at any given time, because phenomenal opportunities will always arise, especially if you've got your eye on these markets. Now I like to shoot for more than 10% in my cash reserves, typically 25 to 40, so I can take full advantage. Take this. Right now, because of that, I've been able to capitalize on a lot of these quality retail plays. Now, I was just speaking to the team over at the Discord tonight. There are some phenomenal opportunities coming up in these markets over the next couple of months that we will be taking full advantage of. That being said, if you've got a lot of your capital tied up in the markets, just be mindful of where you can trim some positions that you're in the green or soon to be in the green. And when you're entering new plays, the same continues to ease into them, but just be mindful. You always want to have cash on the sidelines to deploy and take advantage of great opportunities when they do come up. Alright guys, that wraps up for this one. If you've got any questions for me, drop them down below and I get back to you and say I appreciate you guys on your way out. Make sure you guys are lighting up that comment section for me if you're new, join the movement, and I catch you in the next one.